home prices are soaring this past year. As you can see, from year over year, housing prices still goes up. Even all these housing crash content creators out there, they are scaring people to death. And it's very sad. According to Alto's research, and Mike Sutterson follow his content on a weekly basis, and they show them very good data. Year to date, 2024, home prices have increased almost 400,000. As you can see the chart, year over year, up 5.7% over year over year, and up 2% over 2022. What 21, 22, and 23 during the springtime, housing prices always goes up because the spring buying season is
Right.
with seasonality, right? The first market February to April, last is the second market. Then for the fourth quarter, typically every year he started speaking, you have less activity, so housing median price of homes dip just a little, but this is just typical.
Right. And that's typical, I think.
This is our Yahoo News, which I captured the screenshot, and we reported last week that when somebody purchased during the pandemic at a low historical rate of 2.94% on a $400,000 purchase, mortgage payment would be $1,673 monthly.
Wow.
Same house that people waited to buy right now at same purchase price, 4,000 at today's
Wow.
0.09. Their monthly mortgage would be 26 to 85.
That's huge. That's $1,000.
Now you know why that nationwide we have the lowest home affordability in the history of mankind. A lot of people cannot afford to buy anymore, and they become renters. We are midst of a renters nation. So what does it, if you are a real estate investor and you're having a passive property, what does the
If you've got an oversupply of renters, you're always going to have someone renting your property. Basically, if you're an investor, you're going to have a never ending supply of tenants. And which is nice too, because I know the people that we work with in Buffalo, Niagara Falls, to Buffalo Turnkey, it gives them an opportunity to pick the best of the best in terms of a client or in terms of a tenant to rent your property. I think it's a huge advantage for anybody that already owns property. When there is a shortage of housing and an overabundance of renters, we win.
exactly? Not only that, from a vacancy factor perspective, as a landlord, we own rental properties. We expect for the foreseeable future that with lowest vacancy rate in history would for us, and the occupancy rate for us or the landlord be very, very good. So as a result, and we could expect to increase the rent over time in alignment with inflation. So the risk of owning the income property in the way we talk about it is lowest. The investment risk is lowest in history, as far as I'm concerned, especially if you buy in the right market, you surround yourself with a great team, whatever the thing that we have, right?
Absolutely.
Yeah. So what is the risk out there as opposed to risk of not investing in real estate? The risk of not investing, you keep your money in CDs and money market or banks. Inflation, the real inflation is probably 7 to 10%. It's not really 4%. Your money sitting in the bank or eaten up by inflation. You know
That's true. You're absolutely right. It's true. I don't think people really think about that. I think the CD rates have gone up a little bit, which is nice. But like you said, it won't keep up with the cost of inflation. And you're missing so many different advantages, the tax advantages of owning property. And like we talked about earlier, being able to leverage and having an unending supply of tenants and the property increase in value and all that. So you're really doing yourself a disservice to just keep all your money in the bank. Not to say you shouldn't have some money in the bank, but yeah.
I agree. So next chart goes over. This chart applies to primary home buyers, owner occupied, as well as investment homes. Adjustable mortgage, I would not go there. 5% of all the loans out there are adjustable. Look, adjustable, they have a negative connotation. If we look at the 8,000 crash, okay?
Yes, people got caught with those adjustable mortgages and they couldn't get out of the houses.
Yeah, we talked about that before, but 5% of the loans out there are adjustable. what people want to do a low adjustable rate so they can afford to buy the house. I would not recommend that. So I just
Definitely not.
30-year fixed rate mortgage. That is a successful blueprint, whether you're a
Yes.
primary home buyer or investment buyers financing. So stick with 30-year fixed rate mortgage because you can always take the rate and marry the house.
You're in the house. There you go.
Always refinance your whatever rate you're getting right now, 7%. If it goes down to 6%, you can always refinance the rate so you can get
Right.
more cash flow for investors. But if you don't own any kind of income property, you cannot refinance. Because you own nothing.
There you go.
Some people own nothing, be happy. Be happy and own nothing. Don't buy into that stupid philosophy.
So do.
Oh, nothing, whatever. Yeah, rate buy down because of the current market. The rate buy down is happening in different part of the country, especially new construction, or the buyers, or they want to get rid of some of their inventory, so they give some incentive to buy down the rates and the cash flow of the property. Something Julie, you and I have talked about many times. Investors know our market in Florida, in Texas, and mainly builders are buying down the rate. They're paying all the points of
Right.
will not come out of your pocket for the most part. So you can cash flow even better than without the rate buy down. Otherwise, as an investment, when you do an investment, when you do a financing without any kind of rate buy down, you can
Right.
higher mortgage rate than a typical owner occupied buyer because if the current rate is 7% for a primary home buyer, owner occupied investor, you should pay a higher rate, 7.3, 7.5% 30-year fixed rate mortgage as an investor. If you don't have the ability to do a rate buy down with the builder that we have lined up with the forward commitments loan program we have separate
Right.
of our markets, right?
Absolutely. Absolutely.
Okay, let's go on. Okay. And this chart is really something that people need to understand, okay? Because so many mortgage holders back in 2 or 3 years ago, they refinance a rate or they buy a home with a lowest historical rate in the history of man. Look at this chart and don't lock in effect. People are not gonna this people's loan, the people that bought in the past,
Right.
they have a lock-in effect. Their mortgage is an asset. Now,
Mhm.
Dave Ramsey, look, he educated a lot of people, but Dave Ramsey, he's wrong about never get a mortgage to buy a home because he says the mortgage is a liability. The mortgages, he's dead wrong. Dave Ramsey, eat your heart out. Okay, we'll work with those people who are consumer debt, right? Credit card
Right. Absolutely. Yeah.
people are have a purely money management risk for the big challenge for most American, especially people that's not own a home. But anyway, but look at this rate. Look, 23%.
Mhm.
Oh, by the way,
Wow.
40% of homeowners in the US have no mortgages.
Wow.
40% of all the homeowners have no mortgages right now. Isn't it amazing?
That is amazing. I didn't realize it was that high. Wow.
Yeah, they're sitting pretty. They're sitting pretty. They are in a very great financial position. Let's look at this chart. The share of mortgage loans outstanding by mortgage holder. 23% of all the mortgages have, have an interest rate of less than 3%.
Wow. That's amazing.
37% of all the mortgages in the country, 37%, but mortgages less than 4%.
Wow.
19% of all the mortgage holders have a mortgage of less than 5%. And then 10% of the mortgage holders have a mortgage
Oh, is
of,
that 5 to 6%?
yeah,
Five,
yeah,
5.01 to 6%.
5 to 6%. And remaining only 4% of the mortgage holders have mortgages of less than 6%. And
Interesting.
yeah, so these 12% probably purchased their home using a loan recently within the past 12 months, right?
Yes.
If there are any just coming out of these mortgage holders, that 4% or more the mortgage holders are the highest risk of potential default.
It makes sense.
But and a lot of people are in this mortgage territory, they are selling right now, potentially. Rest of the people, why should they sell their home and move up to a new home? Well, why they get rid of their 3% mortgage rate, upgrade to a home, pay 7%, and tripling their mortgage? It does not make economic sense to do that. So this lock-in effect will persist at least for the remainder of this decade. In even
Right.
given this lock-in effect, people going to sit on their property, knowing they're going to sell, they're going to sit it for years and years,
Right.
the remaining 27 years of their lives, or even enjoy the fruits of their labor because they're locked in. So therefore,
Right.
supply or inventory, it could be severely lacking for years to come. In my mind,
Good point.
the pent-up demand is still out there because supply inventory is so minimal and demand is still robust out there. Yeah, we can still gonna have a low supply and high demand
Right.
market for a long time to come. So it bodes well for people to own asset properties.
Yeah, I see what you're saying. That makes sense.
Again, ever since the housing crash of 2008, the builders and they're not building, and year by year for the past 15 years, housing inventory has been decreasing.
Mm-hmm.
Create a people still don't understand economics 101. We should have taught in grade school, sixth grade, seventh grade is grade, economics 101. When demand exceeds supply, how the housing prices will go up.
That's right.
It is that simple. Why can this is such a
Very basic. Yes.
so basic? And people today, a lot of people still refuse to believe it. This is the
Right.
historical truth. And a lot of people out there still believe there are still going to be a housing crash.
Right.
Or in denial. I bet you
Right.
those people that gravitate towards the housing crash grows, people that subscribe to these negative headlines, people
Right.
subscribe to those housing crash growth, the porn out there. Negative news, Sarah.
Yes, it does.
And
Fear sells.
that's how it is, right?